Welcome to the Compliance 911 Show, a no-nonsense podcast discussing hot topics for today's busy compliance professional. It's everything you wanted to know about regulatory compliance, but we're afraid to ask. And now, here are your hosts, Dean Stockford of M&M Consulting and Len Suzio of GeoData Vision.
Well, welcome to our podcast series addressing everything you wanted to know about regulatory compliance, but were afraid to ask. Dean, we have covered a myriad of topics over the last couple of years. So what interesting topic have you prepared for our audience today?
Hi, Len, and it's always nice to see you. I thought I'd talk about the basics of BSA. We've been talking a lot about, obviously, compliance areas over the last couple of years, and BSA I've touched on in maybe different segments, but I'm going to focus today on the record keeping requirements, and this is one of those areas that we sometimes will see what we call complacency. So I wanted to remind everyone of the importance of sound BSA program.
That's a great topic, Dean. Now, it's my understanding, and I don't know if this is accurate or not, that BSA is examined as part of safety and soundness and not as part of regulatory compliance. Do I understand that correctly?
Yes, you are correct. It is, while there are many compliance components, the regulators view it as part of safety and soundness of an institution as opposed to a compliance examination. Although there are, again, numerous provisions that we consistently refer to as the compliance provisions, the overall program is examined for safety and soundness.
Okay, that's interesting. So what are the provisions, Dean?
Well, the provisions are quite extensive, so I like to break them down, at least in my mind, and the way that I've typically trained to it in the past, is two parts. And I always have to classify when I say it, because the first part of it is the BS. And that's all the basic stuff. So, I always get kind of a chuckle from folks when I say it's the BS.
Yeah, that's the first thing that came to my mind, too, when I heard BS. Okay.
But the basic stuff, is everything that, it's all the record keeping requirements that really have been in place for many, many years that most of us already know. And then you have, of course, the A, which comes in for BSA. And the A is actually all of the additional stuff that was imposed on us post 9/11. So you have kind of the pre 9/11 and post 9/11. And again, I can break those things down further.
That's good. I don't know how everybody's mind works, but I know how my mind works. When I'm covering a topic that's got a lot of subheadings under it, I like to have categories established so that you can organize it in your mind and remember these things. So I think your approach is a good way to remember all these different provisions. So tell us about this, Dean. Elucidate on that.
Yeah, no, and I agree with you. It's always helped me, to kind of break things down and work kind of in different parts. And so let me get into the BS. And as I said, that's the basic stuff, the stuff that we're accustomed to, that we've all used and practiced for many, many years. If we've been in the banking or the financial world, we have to have board approved policies and procedures. And within that policy, the board should designate a BSA officer. And I always like to say a competent BSA officer. Just giving somebody the title is not sufficient. And so they should have a competent or designated competent BSA officer.
So you wouldn't give it to the parking lot attendant, I trust.
Yeah, no, that wouldn't be a good idea. By no stretch of the imagination. But, and one of the other record-keeping components is monetary instrument tracking of cash sales. So any teller's check or cashier's check that we would sell for $3,000 or more in cash, we would be required to maintain certain records relative to that sale. Very similar. Large cash transactions reports, better known as the CTR, that would be cash in and cash out in excess of $10,000 in any single day. And that's in the aggregate. And again, for those folks that try to go from branch to branch to branch to keep their deposits under the reporting threshold, not only would that be a form of structuring, and a suspicious activity report should be filed. But systems and people, in some cases, have to be able to aggregate those transactions, identify them for reporting purposes. So again, CTR, large cash reporting, is $10,000, over $10,000 in or out, aggregated in a single day. We can also exempt under two rules. They call it phase one exemption rules and phase two exemption rules. Certain companies and folks from the regular filing of a currency transaction report, which is the CTR. They have to meet certain criteria in order to be exempted for that filing. And again, we would want to look at that. I'm not going to go into great depth today relative to what phase one and phase two requirements are. But by all means, institutions that have heavy CTR activity should consider exempting certain individuals and companies from routine filing. Wire and ACH transfers, again, $3,000 and above, we're required to maintain certain records regardless of how they're funded. Suspicious activity monitoring, and this could be a manual process or it could be a systems related process. There are really two anti-money laundering systems out there. One is called a behavioral based system, and the other one is a rules based system. So, but both of them essentially look at behaviors, I would say, of sorts, of our customers, and notify us or alert us when something just doesn't look right, like the train has gone off the tracks a little bit. And therefore, the institution would have to further investigate those activities to determine whether a suspicious activity report would be warranted. There is also certain thresholds, again, that we have to look at as to whether a suspicious activity report is required. So we would want to take a look at those as well. Anti-money laundering controls, very similar to your suspicious activity. In a lot of cases, those are automated processes. There are systems that help us with our anti-money laundering efforts. And we would report those efforts on a pretty regular basis to our boards of directors and audit committees. And they're always purposely vague. When I say the suspicious activity report, we certainly don't get into suspect information when reporting it to the board. We typically tell them, a slight narrative as to the circumstances that resulted in the filing, and then our total exposure relative to the filing on the activities. And then last but not least, which has been in place for many years, and this one does have an annual expectation by regulators that we train on an annual basis all staff that have BSA AML responsibilities. In this case, perhaps we could exempt a janitor within an institution from regular annual training. But aside from that, everybody down through the various channels, including the board, are required to have annual BSA AML related training. So
that's a lot.
As you can see.
Yeah. I by my count, I was keeping track as you were enumerating these different subheadings, and I counted 8 of them. So that's quite a list to begin with. But tell me now, you mentioned 2 parts. That's just 8 subheadings under the first part, the BS or the basic stuff. What comes under the additional stuff, Dean?
So that's I'm glad you observed that, and that's why I think it's imperative to break it down into those 2 parts, just because they're so overwhelming. So when you think about just the basic record keeping requirements, you can put those in one category, and then we have to think about really all the things that were imposed on us after 9/11, and hence why I tried to keep my my presentation somewhat small today, because each one of these bullet points obviously is critical, and I expand upon it. So let me get into the A. The A is all the additional stuff that was imposed on us after 9/11. Customer or enhanced due diligence. Customer due diligence, obviously, is a series of questions that we have to ask when the account and the relationship is established. And what that does is it helps us establish a baseline of risk, so we know whether or not a customer has actually deviated from that risk. Enhanced due diligence comes in when we've identified a higher level of risk that would really require a much more robust monitoring procedure. So, and there are some what we call inherently high risk businesses that the examination manual itself has identified, in that I've listed several, but money service businesses would be one of those higher risk entities. And it doesn't say that we can't do business with them. What it says is, if you are going to do business with a money service business, then there's a minimum level of due diligence that needs to be conducted, and enhanced due diligence for ongoing monitoring. Similar to PEPs, and PEPs are politically exposed persons. So with that, yeah, and it can be a little confusing, but really what that means, it's anybody that has close ties to a foreign political figure. So is it your uncle, your father, your brother, or or somebody that has indicated to the institution that they have close ties to a foreign political figure. Now, I do know some institutions take that. I always say they err on the side of caution, and they basically look at everybody that's tied to a political figure, regardless of whether they're foreign or not. I don't necessarily recommend that, because again, it refers to foreign political individuals. Non-resident alien accounts, again, another area that is considered higher risk, and we have to conduct additional due diligence. Cash intensive businesses, those are gas stations, restaurants, those businesses that deal with high levels of cash. Privately owned ATM machines, those are those small machines that typically carry about a $3 charge every time you walk into it, but they're very convenient in convenience stores. And those are not typically owned by a bank, they're owned by individuals, and they have replenishing agreements and servicing agreements relative to them, but they carry a higher level of risk, so we have to conduct enhanced due diligence. And then marijuana related businesses, not just medical marijuana, but also recreational marijuana. And one of the big issues there is that, as we know, not a lot gets done in Washington. They talk about it an awful lot, but they certainly haven't got any bills passed in Washington that would legalize marijuana on the federal level. So while individual states have legalized it for recreational and medical purposes, the federal government hasn't. Now, that doesn't mean we can't bank those relationships. It just means the controls that we put around those processes have to be fairly robust, and we have to conduct enhanced due diligence for each one of those customers. Customer identification is another area. It was in place prior to 9/11, but it was called Know Your Customer. And the only thing we had to do was identify individuals. As part of the Patriot Act after 9/11, we're now required under customer identification procedures to identify and verify. So that's the difference between what we used to have to do versus what we have to do now. OFAC, that stands for the Office of Foreign Asset Controls. And this is a list that includes sanctioned individuals or countries that we can, that basically what the rule says is that if we have a positive hit, so if we have a customer who's trying to conduct a transaction or is in our database that has a positive hit on the OFAC list, we would be required to block or freeze those assets and report those on a form to the Treasury. And then Treasury would give us instructions as to whether we could release those, whether we have to hold those and continue to block them for periods of time, depending on what their response is. 314A is a law enforcement list. Essentially, we have to check to make sure that we don't have a suspect or a business within our database. And it's a list that we have to check, a series of control numbers to look at the suspects, and then run against our databases to make sure we don't have any positive hits. If in fact we did, we would report accordingly to the law enforcement agency that initiated the 314A request. 314B, that gives us the opportunity or the ability to share non-public personal information about certain investigations, could be fraud investigations, with other financial institutions, as long as we are a registered participant and as long as we have confirmed that the institution we're sharing the information with is also a registered participant. So Again, it's a process we have to confirm before we start sharing those types of information. And then last but not least, I don't want to leave it out, but is called Section 311 Special Measures. And that's dealing with foreign transactions, foreign financial institutions. And if we had a positive hit there would be a series of instructions as to what the special measure is. And then again, we would have to report that accordingly. So you can see it's pretty exhaustive, and that's why I like to break it down into those two parts.
Yes, and this is good information. So are there areas within the provisions that you just discussed that carry a higher degree of risk for noncompliance?
Yeah, the answer, well, I guess the short answer to that is yes. And to date, a vast majority of the quote unquote civil money penalties that we have seen assessed are the result of financial institutions' failure to monitor, identify, and report suspicious activities. So it's imperative that institutions have strong controls in place relative to the suspicious activity monitoring. In addition, regulators have really set I'll say, a new expectations that institutions implement what we call a SAR no-file process. So this is a process where typically it involves more than two people who are tasked with reviewing internal suspicious activity referrals from staff or systems to determine whether the facts and circumstances support the filing of a suspicious activity report. I typically call this a SAR referral program. If they don't have one in place, then they better do so immediately. And these are reviewed very, very heavily by the regulators, and it's now an expectation. Not only do they want to see the suspicious activity reports that have been filed, they also want to see the suspicious activity reports that have not been filed or the referrals that haven't been filed to see whether there's, again, strong controls around that process, and whether something that should have been filed wasn't. They would have that discussion with the institution. And then last but not least, and this has always been a real big issue ever since the customer due diligence provisions came out, and that has to do with the types of questions that institutions ask in order to establish that baseline of risk and whether somebody's deviated from it. And, a vast majority of the questions we already ask anyway. We just do a very poor job of analyzing it. If somebody is taking, I live here in Maine, and the one thing that would stand out to me would be if all of a sudden somebody shows up on your doorstep to open up a new account, they've got $9,000 in cash, and they're from Massachusetts, but opening an account here in Maine, I mean, that right there just doesn't pass the sniff test. Well, that's all part of customer due diligence in analyzing the information. I didn't say that the account wouldn't be opened, although the institution has the ability to refuse, but they have to conduct that due diligence. I mean, obviously, the first question is, where did the funds come from and why are you here on my doorstep with $9,000 in cash? That's part of the process. The other part of the process is, why are you driving from Massachusetts to open up an account here in Maine? I mean, that's another part. So, that's obviously a real clear, basic example, but it can be much more complicated than that. And so it is important that they have strong customer due diligence controls in place.
Dean, I never thought that I would thank somebody for presenting a list of BS, but in this case, it's particularly appropriate. The basic stuff and then the additional responsibilities imposed since 9/11 under the BSA. This has definitely been informative and eye-opening for me, and I thank you for presenting this information to our audience today. This is Len Suzio from Geodata Vision.
And this is Dean Stockford from M&M Consulting saying thank you for listening to today's topic, BSA Basics.
Welcome to the Compliance 911 Show, a no-nonsense podcast discussing hot topics for today's busy compliance professional. It's everything you wanted to know about regulatory compliance, but we're afraid to ask. And now, here are your hosts, Dean Stockford of M&M Consulting and Len Suzio of Geodata Vision.